All right, hola guys, que paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Hope everyone's having a good week so far. Let's dive right into this. Let's look at Bitcoin. Let's do a little Bitcoin update. So I have a chart here that I shared with my group the other day. It's a linear chart that goes all the way back to 2020, and it's got these two cycles on here that you could see. And on this chart, I kind of did like a hybrid Wyckoff schematic with it. Like I have the buying climax here. You can't really see because this thing's in the way. Let me move it. But like we got the buying climax, the automatic rally, the secondary test, the sign of weakness in B coming all the way up and through the trading range resistance line that was drawn through the buying climax and secondary test, culminating in this upthrust. Now this upthrust is this last top that we had this year, or was it last year? I guess when we topped out at 109 grand, and then we came back down. And then you see through the automatic rally and from the bottom of this where the markup began back in October of 20, this flat line here, price action, I was able to draw like a macro trend support going through these lows. And then we had this dual cycle top. You know, those that have been following this channel know that we've been modeling this distribution that's playing out currently off the secondary test, which is really subcycle, the top for cycle B, the cycle B top for 2023. This is 2020. I'm sorry, 2021. Remember, we had two cycles, and then it retraced down through it. It broke through the macro trend support line, and that's when we had this massive sell-off all the way down into November of 22 when we had the low. Remember, Bitcoin went down to 16,000. That's that sign of weakness in B on the macro Wyckoff schematic here. And then we started this whole new uptrend, and just like this past trend here, we were able to draw a new macro trend support line through the lows of this trend going up. And we see, as we saw in the first macro trend support line, there is an area where the overthrow or the throw over goes into, for example, here at the automatic rally, and then we have throw over here as well as the price trends upward. And then we reached the old resistance area. This was here, this area of consolidation, which was in line with the buying climax and secondary test from the 2003 dual cycles. And this was this area of consolidation that was like a bull flag that we had. The period of consolidation, and it was a protracted period of consolidation that we had, which ended with the Trump pump, in November of last year. And then we had the markup. Now, from the bottom, from the sign of weakness in B all the way to the apex of this rally, of this upthrust, it was about almost 600%. Right? So 600% from 16 G's to 109, let's just say. And if you go back to this one, now this is 4 years, we had from this area here, I won't even count this part, but this flat line here right before the markup where this dual cycle, the first dual cycle rally started, this Elliott, this 1 2 3 4 5 ABC here, this first Elliott wave cycle, this area here that started it off. And we had a second all-time high with the secondary test, came a little bit higher, so I went off that because I don't really count this as a bear market, this automatic rally, because because it didn't go through the macro trend support, came back up, it reaccumulated, right? So from here, the bottom to the top of the secondary test is about 580%. So it's almost equal to the kind of liftoff we had from here, the percentage. This is 592, more or less. This is 583, more or less. This one we had a dual top. This one we had a bull flag on the macro. And then from here it marked down. So we kind of like have like a head and shoulders patterns, like the a very well known price action pattern that many of you know. Head and shoulders. You can call it head and shoulders, but really it's a Wyckoff. It's a markup, reaccumulation, markup, reaccumulation, distribution, and then redistributions, and then all the way down till you get to the other shoulder. This is the left shoulder. That's the head. That's the right shoulder. This right shoulder got stopped out at the macro trend support, and then it reaccumulated and created a whole new head and shoulder schematic, or another 1 through 5 Elliott on the macro, and then an ABC. The second one, though, for the secondary test, this shoulder broke through the max support, and then it redistributed down, and then we know what happened after that. It went all the way down to the 16,000. And so here, it's a little bit different. This year, we're going to focus on now, we have just one gigantic macro head and shoulders playing out. Okay, this left shoulder here, this is the consolidation prior to the Trump pump. And of course, this is the head, big head. And now we're coming down for a shoulder. Now, before we get to the shoulder portion, I just want you to notice that this support line here that spans all the way back to the buying climax of the first cycle of March of 2021, spanning through the secondary test and all the way to the bull flag that we had last year. This whole area, this resistance area, has never been tested for support. It's never been tested from the top down for support. Okay? So I think, I suspect, now again, I don't have a crystal ball. I don't know the future. But I could draw off patterns, established patterns, and we can guesstimate what's going on. It's like, we don't know. We don't create the weather. We don't know what's going to happen, but we could look at those clouds and we could, kind of judge we could try to prognosticate what's going on based on empirical evidence, right? And so we have this evidence all to show us that if this follows the established algorithm, this is most likely, this area where we are right now, coming down off this distribution from this top, we're most likely we're going to retest this supply, this trading range resistance, and what it's going to try to do is create a support line here. And we'll know this when it comes back into the macro support line here, this MAC trend support. We're probably going to have some throw over in it, but if it can establish it like it did here at this automatic rally point, then it can flip this line. It can flip this area of retest. And then from here, we can go up and begin to maybe create another top like it did 4 years ago here. And we had a whole other rally, which created a whole new all-time high. That's possible, but not before a retest. So that's what we're looking at. We're looking at a potential retest. We're going to come down, most likely, and it's going to create or start playing out. We're going to see that right shoulder starting to play out here. And then from there, we're going to have to do some serious VSA when we're in this area. Now, this MAC trend support area is in the low 70s. Throw over to the end of the MAC trend support is about 66. And if we go through that, I would say this trading range resistance. Now this horizontal zone here, let's say we go through the MAC trend support, kind of like it did here a little bit. We had throw over that went even through the MAC trend support. And here, of course, we went through, but it wasn't able to re-enter this support area. It got rejected, and that's what precipitated this this macro sell-off, and that's a proper bear market now. If we break through this MAC trend support line, and then we're not able to hold our own with this shoulder coming in. See, this is kind of what I anticipate. Coming down in here, retesting, and then maybe doing a sort of like a right shoulder kind of thing. And we may test the bottom of this this support area. Remember, it hasn't been tested yet, so we don't know. But the bottom of this is 59 Gs. I say if we break through this, then we have like an event kind of like this. And then I think it's curtains from that. But if we're able to hold our own in here or in here, then we can have something like this play out, the automatic rally, and reestablish support within this, flip this macro trend support line. Well, like it's still support. If this support holds, then we'll bounce off it and perhaps create another all-time high, and then we'll see the altcoins rally and all that stuff. We don't know yet. It's inconclusive. But I am watching it on the micro now. Of where we are now. This is shoot. Why is it doing this? All right. So here now at this retest area. Now this is this. We're hovering right above. We have a CME gap up here between $86,000 and $87,000. But now I'm suspecting we may not hit it, or we may have already breached it, like we see here. This is the future. This is the CME Bitcoin futures chart. This was the gap, the last gap that we had. And then we came back up here, but then we would probably need to close this out. This is 86. So normally it closes it out. Now, if it closes it out, it would mark back up from this rising wedge kind of pattern that it's in. Let's go back to this here. And so I have it in this regression trend. So if it would continue to trend up in this rising wedge, kind of like this one here, the sister wave, that this is the pattern within this regression trend, then it could hit the bell up here at the CME gap, close it out. This would be this area that we just looked at, the 87 Gs, and then mark back down. And then we would be back into this macro schematic then en route to fall into this MAC support, trend support line. And what I think is going to happen is we're going to retest this area. It's going to start maybe doing some lateral consolidation. Once we get low enough, anywhere within this sweet spot where I have this rectangle in this retest zone, this is where I'm going to be, what I'm going to be looking at. And I do think we're going back down in there. I think it's inevitable. I don't think this is the bottom. Especially with everything going on in the world right now. There's, the CNN, Asian stocks are slumping now amid U.S. recession fears. It's all over. You just do a cursory kind of search, and you're going to find all kinds of stuff. With the Treasury bond recession, bond market, Trump trade is looking like a recession play. Bond market is predicting a recession within the year. Now, I know that market makers, informed interests will use this news as a catalyst. What they're trying to do is engineer a shakeout, a terminal shakeout of retail, and they're going to play on this fear narrative, and there could really be a recession. But in the midst of the recession, if it comes, And when things are the most bloodiest and there's the most despair circling, that's when the reversal is going to come. And so we need to be aware of the Machiavellian tactics that they use when it's the bloodiest and the darkest. It's right before the darkest hour is the sunrise. So when it gets just insufferably despondent and terrifying in the markets and just all hope seems lost, that's when the reversals come. So you buy it when it's the bloodiest and you sell when it's the greenest. So we look, bond market, Trump trade is looking like a recession play. Yeah. So they're talking about, what is it, lowering the treasury bond yields is what everyone's anticipating. That's not good. So the treasury bonds, as you know, that's what the Federal Reserve sells to the reserve banks. So yeah, they sell it to the bank when the recession is when inflation is going through the roof. They create money, right? And then they buy the bonds from the banks. Then the banks are flooded with liquid now from the new money that the government printed, and then they want to lend it out to businesses and individuals, right? And so they do that buying tight, so they lower the interest rates so people are more apt to come in and take out a loan for their business, trying to pump up the economy. Well, the converse is true. When things are looking too good, they'll sell the bonds to the banks, and the banks will buy them. And so there's all the liquid going into the Federal Reserve, and money is scarce. And so supply and demand takes over. You got all this demand, but not a lot of supply. In this case, it's fiat. You want a loan? Fine. The interest rates just went up. So the treasury bond yields, yeah, that's a big thing. I think that gets overlooked when analyzing these markets at the cusp of a recession, which is what it looks like we may be entering into. I'm not scared. All this does for me is it affords spectacular buying opportunities for Bitcoin. And, I hope Bitcoin gets as bloody as possible, because that's where I'm buying and that's where I'm holding. Like I was talking to my group today, you think of Bitcoin as sort of like you would regard like a treasury bond or a treasury bill or a note or one of these government securities that have like a long maturation period. It's kind of like that with Bitcoin. Some of them have like up to like 30 years, 20 years, some of the bonds, right? Some of the treasury bonds. So, it's like, what if somebody presented you with a Bitcoin bond? And you look at the track record, you look at the historic price action of Bitcoin and all the percentages of yield, of gain over the years since, say, like 2013, like 12 years. And you say, here you go, and there's a limited supply of 21 million of this thing, but you can't touch it for 10 years. You would just put it in a safety deposit box or somewhere, and you would just forget about it, right? I think that's the kind of mentality. That's my mentality when it comes to Bitcoin. I know they're not making any more of it, and I know it's going to keep appreciating. It's going to go through these wicked cycles of up and down, but that's just that's the market. That's for anything over time. And so I think cryptocurrency is the future. If you believe in decentralized finance and all of this stuff, then yeah, some coins are worthy, I believe, of holding with that maturity treasury bond kind of mindset. And then others you swing trade. And it's just, you win or lose, you take the losses to offset your capital gains and all that. So that's how I look at all this stuff. But yeah, back to the technical analysis. So yeah, I'm, in light of all the news and all the fundamentals and the economic upheaval and the and the fear dynamic that's ramping up and evident now. I am anticipating this to let's see, hide drawings. Yeah, this to go down and create, as it were, a another shoulder and test this macro trend support line. If we get a bounce off that, then we can anticipate an all-time high and another all-time high this year. If we break through that 50, that 60, low 60, I'm saying like 75 through 62, anything in there, that's the sweet spot area. If we break through that, then yeah, I think it's curtains, especially if we can't get back up, if we can't re-enter the macro trend support line. I think it's curtains. We can expect Bitcoin at that point to go down to the 40s and 30s and have a proper 70% retracement. Most bearish markets are 50% or more, usually 70% on average. We haven't gone even close to that, you know. We've gone down. So I wouldn't say we're in a bear market yet, but, you know, we've gone 30%. So anyway, beneath here would be 50%. And let's see from the top here. Yeah, that 50% would be around like 54 G's. 70%. Yeah, 70% is something is in the 30s. So I don't think we'll go that low, man. But what do I know, man? Crazier things have happened, right? But yeah, I'm looking at to kind of stay above 50% in this area. And we'll just keep looking as the days go on. We have a Federal Open Market Committee announcement, I think, on the 18th, and so they're going to announce the interest rates for that. And so that could be the catalyst that we need to close out this CME gap, incidentally, right, at 87 G's, if we haven't already hit it in this wedge. But then, like all rising wedges, we're going to go back down. We'll measure out the wolf wave for it. We'll probably bring it back down to this micro regression trend support line, somewhere in the low 70s, maybe 73. And then from there, I think if we do that and we mark down from this rising wedge after hitting this gap, closing the gap out, then I think it's just a matter of time. The writing's on the wall. I think we're going down to retest. We're going down to maybe start drawing out a shoulder. And then from there, we'll just have to play it by ear, doing the VSA, volume spread analysis, volume price action, measuring out the candles and all that. And so subscribe if you're not subscribed, because I'm going to be doing that every day. And I'll keep you safe. I'll keep my group safe. And check out our trading group. Check out, right now it's just a lot of discussions, and there's some traders in there shorting that like to short. I don't short, but like there's a lot of good information being bounced around within there. And then of course you get you get the live chat, the Discord, so you can contact me. I try to get in there every morning. I have pretty hectic days. I do a lot of stuff, but I try to dedicate a certain time of the day to answering questions and just encouraging and bouncing ideas off the group members. And I keep it extremely affordable. So, and then of course you can learn how to read charts with volume spread and, you know, Wyckoff, things like that, price action. And so that's the proper way to read charts. I believe it's been the most lucrative for me. And it's the way hedge fund operators read charts, the way the banks read them. It's what the whales look at. They're not using a whole bunch of indicators everywhere. They're not cluttering their charts with moving averages and RSIs and MACDs. There's nothing wrong with that if that works for you. But for a lot of people, it doesn't work. It works for a little bit, but they're not consistent. Consistency is what we should be looking at. Making money. It's one thing to make a lot of money, to win a few trades, but then what good is it if you lose it the following week? You go bust and you blow up your account. A lot of the times that's what happens with indicators. You have a good streak and then you go bust, because indicators just tell you what's already on the charts. You know, which you could just see with a cursory glance with your naked eye. It's interpreting it, and no indicator can do that. But price action and volume can sometimes give you insight into the hidden clandestine movements of smart money and what they're trying to do through the anomalies with the synergy between the price action and the candles. And that's kind of what I teach. It's kind of like NLP. It's like the technical analysis version of neuro-linguistic programming. Like I said, I used to I used to delve into that. I was an interrogator for many years in the United States Army, a Russian interrogator. And so I have a knack for patterns and picking up on little innuendos, little things that signal other things, hidden motives and idiosyncrasies that I pick up on. And I think volume price action really just highlights it, the moves of the market makers as they contend with each other, because they're trying to fake each other out, right? And so all this, when I look at a chart, it's like reading a book. It's just a whole story opens up, and it's got protagonists, antagonists, it's got motives, subplots, and everything's there. So in my group, I try to convey that sort of enthusiasm with charts. So check us out. Like I said, I keep it extremely affordable. If not, just subscribe to this channel, and I'll try to keep these updates coming out. You could certainly benefit and prosper greatly just off these alone. So with that, I'm going to go. This video probably went on way, way too long, but well, hopefully I got some good information out. So, all right, guys, God bless you. Thank you for tuning in again. And thank you for your subscription. Have a wonderful week. May God bless you and keep you. And we'll talk to you real soon. All right, guys, be kind, be humble, share, give, and it'll be given back to you. Your cup will run over. Focus on blessing people, okay? And watch and see the difference that it makes in your life. God bless you in Jesus' name. Amen. Bye-bye.